Health insurance costs have been rising for over a decade now, and it's projected to get even more expensive in the future. So, if you're self-employed and have to pay health insurance for yourself and your family out of your own pocket, you may be wondering, what are your options to offset healthcare costs? Well, I have some good news for my self-employed friends, because health insurance for most self-employed taxpayers is actually 100% deductible and can be written off. Yup, and not just for you. You can deduct the medical, the dental, and qualifying long-term care premiums for yourself, your spouse, and your dependents, which may make this the largest deduction you can take. So, in this video, I want to walk you through who qualifies and exactly how to take advantage of the deduction, so be sure to watch until the end. And go ahead and like the video so other business owners can benefit from it, and subscribe if you don't want to miss future videos that can help you save and make money. Let's get into it. Hey everyone, Karan from Life Accounting here, where we help you save on taxes and increase your wealth. So let's first unpack what the deduction is. The healthcare insurance deduction would allow the self-employed who qualify to write off 100% of their healthcare insurance premiums. This includes the premiums for your spouse, dependents, and insurance plans that cover children up to 26 years old, even if they are not dependents. When you take the deduction, it will apply to only your federal taxes, state taxes, and local income taxes, but will not apply to any self-employment taxes. To be eligible for the deduction, there are two requirements that simply must be met. The first requirement is that you are not eligible to participate in a health insurance plan by your employer or your spouse's employer. But say at some point in the year, you or your spouse are eligible to participate in a health insurance plan by your employer, you can only claim health insurance premium write-offs for the months where you are not eligible. So, for example, say you were employed for 6 months of the year, but decide to go ahead and leave your job and start a business for the remaining months. In this scenario, you will be able to deduct the healthcare premiums you paid during the 6-month period you were not employed. Now, the second requirement is that your business must have earned income. This deduction only allows you to deduct up to the earned income from your business, meaning the business profit needs to be greater than the amount you would like to write off. So, as an example, let's assume your business has $8,000 in net income, aka profit, and you have $10,000 in healthcare premium costs. You can only deduct up to the $8,000 of healthcare insurance premiums. Remember, with this deduction, you can't deduct more than your net income, aka profit. Thus, if your business does not earn profit or records a loss, you will be unable to take this deduction. Now, before we continue, let me know in the comments if you are enjoying this video and if I should make a follow-up video on how literally anyone, including non-business owners, can pay for medical expenses tax-free, meaning those who are self-employed get to double dip on healthcare savings when they also take the deduction in this video. I'm thinking about it. Okay, back to self-employed health insurance deductions. Let's talk about plan sponsors. If you meet both qualifications, the IRS gives you the freedom to pay for the policy personally or have your business pay for it. The IRS also gives you the flexibility to purchase healthcare insurance in your own name or in the name of the business. If you decide to purchase your health insurance plan in the name of one of your businesses, that business will be the sponsor. And if you have multiple businesses, you should choose the business you believe will earn the most profit when deciding who should be the sponsor of the plan. In the instance where no one business will earn enough income to cover the total cost of your policy, you can choose one business to be the sponsor of, say, your medical and another business to be the sponsor of dental and still deduct 100% of the premium. Granted, there's enough profit. And speaking of profit, be sure to check out the completely free training where I'll show you how to start a 6-figure business with only $250. I'll leave a link for you in the description below. Now, let's talk business types. Okay, while this deduction is amazing, not all business types qualify to write off healthcare for the owners. Listen closely. In general, sole proprietors, partners in a partnership, LLC members, and S corporation holders who own more than 2% of the company's stock are eligible for this deduction because they're considered employees of the business. Now, if you solely own rental properties with or without an LLC, health insurance is not considered an allowable deduction for you, simply because your rental property does not create self-employment income. It creates passive income or losses, which is actually a good thing. So, can you deduct it as a business expense? Well, if you have employees and pay for their healthcare, you can definitely deduct that cost as a business expense. But the self-employed health insurance deduction is actually not a business deduction, but a personal deduction for the self-employed. You see, you can't have your business provide you with health insurance and then turn around and deduct that cost as a business expense for yourself if you are considered an employee. But there is a workaround if you want to take it as a business expense. You can hire your spouse as an employee, purchase a policy in the name of your spouse, and have the policy cover you as well. In this case, you can write off the healthcare costs of your wife as a business deduction because she is an employee of the business. Now, if you do take this route, don't also claim the health insurance deduction for the self-employed. All right, let's go into a little bit more detail about taking the deduction. The self-employed health insurance deduction lowers your adjusted gross income, known as your AGI, and you can take it whether you itemize or not. As a reminder, when you take the deduction, it will only apply to your federal taxes, state taxes, and local income taxes, but do not apply to self-employment taxes. When you go to file the deduction, it's entered on Schedule 1, Part 2, Line 16 of Form 1040 in the box appropriately labeled Self-Employed Health Insurance Deduction. If you qualify for the self-employed health insurance deduction, it's a no-brainer to take it. As we know, healthcare costs are rising literally every year, and it is in your best interest to try and offset that cost as much as you can. Now, if you want more good information, I'm going to place a few videos on the screen that I think could help you. But as always, I'm Karan from Life Accounting. I'll see you in the next video.